Hello, once again, I'm brschultzSP500. Thank you for joining me. It's January 14th, end of day for the S&P 500. Went long this morning, or this afternoon, sorry, on the pullback, and then later in the afternoon it pulled back again. So then I bought my calls for next week. My calls with the expiration of, January 24th. And I bought some long shares as well. I usually go big on my shares and go small on my options. That way, if my options hit, I make a lot of money. If they go bust, I don't really get hurt too much. Little exposure on options and big exposure on shares is usually how I play. So basically what I wanted to show you today is the 10-minute gold wave model. I think it's something special, something spectacular. I'm going to try to make this extremely speedy because I have kids upstairs that are going to be demanding my attention in about 7 minutes, so I've got to be very quick about this. Okay, so the January 21st, 22nd peak, a daily update for today. And again, thank you for joining me on brschultzSP500 stock market timing episodes on YouTube. If you love my work, please subscribe. I want to get to like 5,000, 6,000, 7,000 subscribers. I want to hopefully use my model to be of value to those who have indicators and models that they already use. In conjunction with my timing, as I am not licensed in any way, shape, or form, so please do not take any of my work as any type of a buy or sell recommendation. I'm simply trying to share with you my model and what I do personally. So again, I went long today on the S&P 500 on the index and looking to sell sometime around 21st, 22nd of January, and I will show you why real quick. And I think it is a very beautiful model, the output I think that I've always dreamed to create, and this is perfection, I believe, today. So in this setting. So I hope you enjoy it. If you sincerely enjoy my work and want to donate, feel free to use the PayPal link down below this video in the YouTube channel, or you can scan these QR codes. Thank you for joining me today. This is a very crisp 1, 2, 3, 4. I just think it's gorgeous. The 1 and 2 are near perfect. The 3 is a little bit off, but near perfect. And the 4, just they all line up perfectly, right? I mean, to build a model that can actually find the harmonic of the mid-range timing of markets is just, it's mind-blowing to me. I've spent 13, 14 years asking the Lord for help, asking for wisdom, obviously trying to build something that I've never seen before in my life and have no clue if it could ever exist. That's how this all started, asking God for help. And yeah, so you see the outcome 13, 14, 15 years later now. So to me, this is one of the most beautiful pieces that you can see. The 1, 2, 3, and 4 almost perfectly touching that trend line, right? And so you take that trend line off those 4 points, you project it up to the top of the graph, and you bring it down, and that hits January 21st, 22nd. And again, you'll be taking out January 20th for Martin Luther King Day. So really put more emphasis on the 22nd. So make the 22nd my official call, okay? And then plus or minus a day is 21st, 23rd. So those are my peak dates for the market, and a beautiful count here. So I think markets go rocketing up to peak again around January 22nd. Thank you so much for joining me. If you love my work, please subscribe. Please consider donating. If you would buy a ticket to a baseball game or a Chicago Bulls game or Chicago Bulls playoff game, and you've never donated, and you're just in love with my work, please feel free to donate. It would be a big encouragement to me. And for those of you who are new, I'm trying to build up a huge base of support via donations that one day maybe I can do this full time. You know, if I have 10,000 subscribers and donations are rolling in every time I hit one of these calls that happen every 7 to 10 days, that could definitely make up for a salary or more, right? And then maybe I could do this as my full-time job. So but right now I'm trying to cut out 10 minutes here, 12 minutes here, and again, I've worked on this model for about 15 years, this theory 15 years, so hopefully you don't feel like you're just giving to some guy that just draws in Excel. Certainly not. I have a mathematics minor, a finance major, but hopefully you're really enjoying it. Hopefully a lot of you are seeing the value in the midterm model that I've taken a year and a half off of my videos to try to solve, I guess you might say. So I believe this is the solution that you're seeing here. I think it's a beautiful, gorgeous thing. And yeah, so I took time off because my model was garbage in the midterm. It was good on very, very short term. That's that purple wave you see in the background on the 5-minute scale is extremely strong. This is a 10-minute model that you're seeing, even though it says 5-minute in that chart there. In the little blue, it says 10. This is a 10-minute model. Thank you so much for joining me. I'm Brschultz. Until next time, take care. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, brschultzSP500. Systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast.
Forecast.
Use.
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.